Hi, everyone. This is Jason Burek of Wall Street for Main Street. We have a returning guest. Back with us is Dan Collins, who runs the China Money Report. Dan's lived in China for over 10 years, and he has his boots on his ground. And you guys are going to get a lot of China insights in this interview that you guys are not going to get in the mainstream media. So thanks for joining us, Dan.
Thanks, Jason. Great to be back.
Great. And Dan, we wanted to have you back on here more, but it's just tough to coordinate everyone's schedule. And, you're one of my few contacts in China, so I'm very, very happy to have you on here, especially because there's always, it seems, this important China news coming out. So what types of observations are you seeing China? Give our listeners a Chinese overview of what's going on in China's economy right now, and maybe some of the things that the mainstream media is missing on their reporting.
Sure. Well, Chinese growth right now is really, really slow. Governor of the Central Bank of China came out actually today, said, we're facing very dim prospects in the export markets. We're going to have trouble growing here. I think what the mainstream media is missing, though, is this is not the impending doom in China. China is really a real economy. It's not a financial economy like in the United States. So what's happened is China, about 2 years ago, due to inflation problems that were running really close to 10%, official numbers are about 6 or 7, they had to clamp down on the economy. They jacked interest rates up from 5 to 9%. So they cut off lending, very difficult to get a loan. They totally stopped the housing market. They put in measures. If you want to buy a new car now in Shanghai, it's $10,000 cash for a license plate. So China has engineered a slowdown. It's resulting now in official GDP numbers that have just come out about 7.2%. In reality, I can give the listeners a little history on the Chinese GDP. You always have to take these numbers with a grain of salt, particularly in China, dealing with 1.4 million people, all these different provinces. They have different dialects. Yet somehow China always claims to meet their targets on the GDP. It's, a real estimates, I think, from people here on the ground will tell you we're not growing at 7% right now. We're probably flat to 3 or 4% at most. We see very strong contractions in fixed assets, fixed investments. That's really mainly due to the housing. Volumes on housing transactions have basically been stopped for the last two years plus. But China is boosted by the retail sector, the consumer sector. So you still have people here, rising incomes. You still have 15 to 20% wage growth here every year. So there is still a growing middle class. There's growing urbanization. That's helping the growth, and that will continue the growth story. But China's definitely in transition now of trying to transition from the export-led economy to domestic consumption.
Yeah, and that's going to take a certain amount of time, Dan, a number of years, and that's something that the politicians there are very scared of, because the politicians, there's only a one-party system, I guess, and even though there's only a one-party system, if the economy is not going very well, those politicians are still in jeopardy of riots and other social unrest that could threaten their job security.
Sure. There's social unrest all over China. China's a very high-pressure society. People are under a lot of pressure now, just to afford daily living. Inflation has been so bad the last 2 or 3 years, I'm often shocked now that when I do go back to the U.S., cost of living is much cheaper. Everything's cheaper: food, clothes, cars. As I mentioned in Shanghai, $10,000 for a license plate cash. Then you buy a car, you're going to pay 50% more for the exact same car that you'll pay in the United States, and you'll pay cash for it. There is a leasing market, but nobody uses it. It's about 90% of the cars are paid cash up front here. So yeah, it's a very delicate balance the government has to manage. You can get GDP growth, but you could still get social unrest. You have a totally unbalanced economy now. I personally put that to their misallocation of trying to control the renminbi. They've had China booming economy, and they're trying to keep their currency on pace with the United States, which is a collapsing economy. In the real economy in the United States, the production figures have collapsed. So what's happened is it sent all these mispriced signals. You have all these factories now in China. Keep building factories, and you literally cannot find factory workers now. It's very difficult to find factory workers. I have businesses where I employ over 1,000 people in factories. and you can't find people. Now, on the other side, the white-collar workers, all these people that have graduated college, they can't find jobs. So China has, with this policy of the renminbi, trying to weaken it, they have stimulated the factories and the fixed investments, and they've stunted the growth of the retail and the service sector. And these are the kinds of imbalances, as you mentioned, Jason, is going to take, several years at least, at the very minimum, to try to work through.
So the global market, the global economy, and world markets cannot expect China to continue growing because, to continue to carry everyone else. Because I know after 2008, 2009, once that humongous China stimulus was pumped in, I think it was over $1 trillion, and that massive amount of money was put in. The markets just took off. The commodity markets, especially with after the QE announcements, the Fed stepped into, the markets just went nuts.
Yeah, absolutely. China, the interesting thing about China is I don't think people grasp the absolute size of China now. So, for instance, the GDP is $7.2 trillion now. That's up from $1 trillion only 10 years ago. That's 7 times.
Wow.
That's up from $357 billion in 1990. So that was the year I got out of high school. China had a GDP of $357 billion. I've lived over here 15 years, and now they're at $7.2 trillion. I mean, it's mathematically, amazing how fast the GDP has grown. But in addition to the GDP, if we look at the real economy, when I came here, China sold less than 1 million cars a year. Now they sold 22 million cars this year. I mean, the U.S.
And that's a bad year. Yeah.
Yeah, and that's basically a flat year. United States, in comparison, sells 12 million cars. So you know this. I know you know the numbers on the commodities. China's 50% of everything. Wrote an article a while back on financialsense.com about China will be 50 cents of everything, of every market. And most of the car makers predict China will be 50% of the global car market. Commodities, it's already 50% of every market. It produces 50% of the steel. So absolutely, if we want to see what's going on in the market, the Fed and these banks are obviously important. But actually what might even be more important is watching, find out what happens in China.
Those are some great insights, Dan. And, you already mentioned the commodities here. And I think it's important here that the Chinese stock market, there's not a lot of great companies on there. I think there's still some financial reporting issues. You can talk to our listeners about that maybe. But unless it's also listed maybe on American Exchange as a Chinese company and it pays a dividend, people should be aware of that. So the best way to play China, any of the growth, which there is still, I guess, some growth in some areas in China, is still with commodities then, Dan, right?
Yeah, China will continue to grow. We're not going to have a hard landing. We're going to have, very flat couple of years. It's clear to everyone it's affected the commodity markets. In terms of financial reporting, I have the China Money Report, which is a financial newsletter. I recommend everybody don't buy Chinese companies that are listed in the United States. I do recommend a few in my newsletter, but you have to really know what you're buying. So the problem is the U.S. regulations are so weak that they attracted all of these scam artists from China. These companies would not list in Shanghai because they'll get the death penalty for what they do. They won't list in Hong Kong. They'll get their kneecaps broken. So they all go to the United States where they can lie about their sales figures, lie about their customers, lie about their, if they have 10 million RMB in sales in China, they'll say they have $10 million in sales in the United States. So there has been company after company. I wrote about this 3 years ago, how this was going to explode. And sure enough, about at least 70-80% of the Chinese companies listed on NASDAQ have imploded. The good news, the positive thing for investors is that if you know the right companies, they're out there now at P's of 3 or 4 times. So they're very, very cheap.
Wow, that's very low.
Yep.
And there, to add to your point there, in the United States here, there's just a lot of fraudsters on Wall Street, a lot of rent seekers, to use an economic term, who will take out the money. They know the deal's bad. They know there's lipstick on this pig. They know this is a turd. This company's bad. They know the numbers are bad. The earnings are fabricated or a lie, outright lie. And, they'll take their cut to polish it up and sell it off to investors because they're already making their money right up front in the deal, and they have no vested interest in making sure the company's numbers are right. So that's part of the problem here in the United States. It's going to be pervasive.
absolutely. There was and is an entire industry. I think most of these guys have been kicked out of the industry by now, but just because nobody's buying Chinese companies in the United States. But there was an entire industry set up to do exactly what you're talking about. It's just find any kind of company that you could pitch and spin in the United States, and then they would sell it as China plus something. So China plus timber, Steno Forest, China plus environmental cleanup, China plus water, and they duped a lot of investors into buying these companies, which weren't real companies, or they were real companies and they had one piece of equipment and lied about just about everything.
Well, yeah. I mean, it was easy. It was an easy sell, though, Dan. It was an easy pitch to investors to sell when China was still growing massively, when the numbers were more believable.
Yep.
And all you had to do was just, like you said, just put China in front of any type of business name.
Sure. Well, even small investors got duped, but also the big ones. As we know, John Paulson lost, multi-billions of dollars on Steno Forest. So even the so-called professionals got duped in this.
Yeah, it does happen sometimes too. Even the best guys sometimes, they take it easy on one or two deals on their research. Been having a successful track record for a while, and then you don't take your time and you let a deal go bad, and that's what happens. So yeah. I want to transition to the commodities. We didn't go more in depth for our listeners here. So what we have, in my opinion, after studying the commodities markets in China, is the Chinese sector rotate. But China wants to get out of their paper holdings, and they're going to stockpile copper in a warehouse. They're going to dump, from what I've heard, they've also been dumping reserve coal in harbors in China too.
I've heard
instead of holding.
Yeah.
Instead of holding paper fiat dollars and U.S. Treasuries now. So, can you comment on what China's plans are then to get out of their paper holdings? Because obviously they can't put all of the money into physical gold and silver. There's just not enough.
Yep. Yeah, China, since 2008, it was clear when the Federal Reserve started the money printing on absolute massive scales, the Chinese government has not increased their treasury holdings at all. It's still around 1.15 billion. We see now Japan, with all their money printing and their 200% debt to GDP, is about to replace China as the Fed's largest foreign buyer for treasury bills. So their plans around commodities, they've had this what they call like going out strategy for about 4 or 5 years now, where they, as you've seen these in the press, they're going all over the world, Africa, South America. They bought an entire mountain of copper in Peru for $3 billion. So a lot of this money's getting filtered from the central banks into, with their $3 trillion currency hoard of reserves, into the sovereign wealth funds, and then the sovereign wealth funds are filtering into the companies, the state-owned commodities companies, the Sinopecs, these types of companies, to go buy these commodities all over the world. And they have the money to do it. And it's basically a systematic way of transferring your paper U.S. dollars into real assets all over the world.
Yeah, I did a commentary for Gold Seek Radio a couple months ago for our listeners who want to check it out. I called it Abandoned Ship Without Rocking the Boat. So China doesn't want to chase, each commodity price up if it's already had a big run. They want to go buy those dips on certain commodities that have had big corrections. So the rare earths have had a big correction, so China's obviously stockpiling those, plus China wants to protect their monopoly. Only a couple months after Fukushima and the uranium price crashed, China was in there locking up long-term supply contracts with Areva and with Cameco. So those are the types of examples, and then the oil price had a correction, has been having a correction, and China's been filtering, like you said, the money into CNOOC and PetroChina and Sinopec to go and buy oil assets that, yes, they're going to be criticized maybe in the short term. For the next year or two, it's not going to be looked at as a smart acquisition, but in 10 years from now, I would much rather own the oil assets than hold the paper that China has.
Absolutely.
Okay, so let's talk more then about the different types of commodities and what you expect. Do you still see precious metals demand growing in China then, based on the inflation that you see?
Yeah, I haven't seen recent numbers, but you see the gold imports into China continue to hit records. But what's interesting about China is news will be kind of quiet, and then all of a sudden, oh, by the way, we just increased our gold holdings by 500 tons, So China is the world's largest gold producer. They continue to buy all that. They continue to set records of importing gold through Hong Kong. A lot of this is going through. Inflation has eased here, so I'm not seeing kind of insane gold demand that I saw last year, but it's still growing, and as well as silver demand, which is a new product here in the Chinese banks where they're selling access to silver bars too.
China has a long affinity for silver, right? Doesn't money in Chinese doesn't it also mean silver? And wasn't China also before the hyperinflation and before Chairman Mao took over during before World War II? Wasn't China also on a silver standard?
Yeah, a Chinese bank is Yinhang, which yin means silver. Actually means silver house or house of silver. Silver was the currency here for 1,000 plus years, where they used to have silver taels. The entire currency was done in transactions were done in silver coin and silver, what they called taels, which was kind of a measurement. But that's where we're heading back to, unfortunately, because we see through history time and time again, fiat currencies only work about 20, 30 years before the governments completely debase them.
Yeah, and the U.S. dollar has only been a true paper fiat currency really since 1971 when Nixon closed the gold window. So we're above 40 years now, and the dollar, well, this version of the dollar, who knows? It might only have a couple years left, if that.
Yeah, and it's lost 99% of its value since 1913. So, and as you mentioned, it's exponentially losing value since 71. I think the next historical mark will be '08 when we started printing all this money, and now this open QE, which is basically a systematic system to send money to the banking system. So yeah, it's doesn't have many not too much longer to run that I could see.
Okay, so let's summarize some of your views here for our listeners. China's got a potential banking crisis here. Yes, they have their trade surplus, so they're probably going to have to spend some of their trade surplus on to help out and bail out some of their banks, because I think there's over 50% of loans that are in default in China, and there's been a lot of stories coming out. I saw them on Zero Hedge, where some of the collateral for some of these loans was supposed to be steel or copper, and then there was no steel or copper or high-grade iron ore. The collateral just disappeared. Well,
this is one area, I like Zero Hedge, but this is one area, the Chinese economy, I differ with Zero Hedge most of the time, in particular on the banking system. So you got to keep in mind, there's 3 Chinese banks that make as much money as Apple. Okay, ICBC, Bank of China, China Construction Bank, all made over $25 billion each last year. Their official NPLs, non-performing loans, are 1%, which is very low globally. Do they have hidden losses? Absolutely, and no doubt about it. We've had bank crises in China before. We had one 10 years ago. But we have to keep in mind these are institutions owned by the Chinese government, at least 60 to 70%. And Chinese government is sitting on $3 trillion in cash. So if they want to totally restructure the banks again, like they did in 1994, they can do that. So I'm not really too worried about it. There's a lot of things that panic people on banking in China, which is like the shadow banking system. That's really a problem that the government runs the banks, and that China's literally underbanked. So all the loans are going to the big companies. And if you're a medium, there's really no non-collateralized loans here. So if you're a small business and you want to get a loan, you have to put up your title to your factory. So you can't just go get a loan and someone's going to give you a loan. So almost every loan that's coming out of the banks are collateralized by something. And I've personally gotten loans here for $40-50 million, and you have to put up something. You have to get you have to give the factory title. You have to give the business title. There has to be real assets, and they will only estimate those assets about 30% of the real value. So I don't see a banking crisis in China. There's obviously non-performing loans, but a lot of these bad loans go to government companies, so they will get paid. So as long as China has huge government surpluses, huge trade surpluses, real economy that's not collapsing and is at least flat and growing, I don't see any major crisis in that area.
How is the free market and entrepreneurship and small business doing in China? Is it doing well against the state-owned enterprises or the government-sponsored enterprises, or is there really an unfair advantage that the government-sponsored enterprises have with the low interest rate loans and the financial backing they can get from the government?
Yeah, this is a really interesting question because this is really the whole crux of what China has to deal with now. A lot of people believe, kind of a misunderstanding at China, because of this great state capitalism, they figured out how to grow. That's how they've grown the last 30 years. Reality is, when I came here back in 1998, okay, China was so poor. I knew people who their two brothers would share a pair of pants. They literally couldn't both go out of the house at the same day. I mean, I could tell you stories. I mean,
that's sad, but it's amazing how far China has come, though.
Yeah,
from those humble beginnings.
But how they did that was when I came over here was basically the government didn't have any money to give anybody, so they told people, you have to go start your own businesses. Even the military went out and set up hotels all over the country. The universities, the technical universities, they set up their own tech companies. So people had to go do their own business. It was like total free market capitalism. That's where we got into a problem with the environmental, no environmental regulations, things like that. They set up low tax rates, 0% taxes for 3 years. Foreign companies flocked here, set up the manufacturing plants. What we've seen last year is they've gotten really kind of smug about their success. So the last 5-8 years or so, they have been putting more and more money into state companies, and the state companies are out there, and you can't compete against state companies. They get free. They get free money. So they get free money. They don't have to make money. They can write anything they want on their books. So, you can't compete against these guys. The private sector is still out there. But if you're in a business that's competing against state-owned companies, you should look for a new business.
Yeah, and with some of these companies like a China Mobile, like they get, all the rights for all the best areas for cell phone usage and stuff like that. Like they get it from the government because they're a GSE, right? Yep. So a private company can't go in there and compete with them on price because they don't have the political connections.
Yeah, it'd be impossible. I mean, most of the large, so you got telecom, you got banking, you have oil and gas, railroads. These are all government dominated industries. So China, the private industry of China, which is very successful, is everything below that. The car parts is mostly private. A lot of the car industry is private, although they're joint ventures. The government here, though, they've been more successful in the fact that if you look at communism under the Soviet Union, they just had one telecom company. Whereas in China, they set up 3 or 4. They're all owned by the government, but they're made to compete. So they have been able to get away from the total inefficiency that you would have seen under a Soviet-style system. But there still is a lot of inefficiencies, and China's going to have to look at starting to take, harness in these state-owned companies and let the private sector grow again. Otherwise, they're going to be in trouble.
Yeah. I mean, the transition China is going to have to make to a more market-based and more open society in general with civil liberties and things like more human rights and things like that. It's going to be a tough transition, especially because you mentioned the economy. And the transition part of it is they're going to have to be able to protect themselves from the inflation. Like they're trying to balance out the inflation because obviously I think they figured out almost 2 years ago that they could not grow at the pace they were growing at. They couldn't blow all that stimulus money because the trade-off was the inflation they were going to have, the food price inflation. It was going to destroy everything because wasn't the food.
Absolutely, they were about to go off the rails with the inflation. So the days of China growing 12% a year, that's over. We'll probably grow 5, 6, 7% going forward. The commodities, like you mentioned, people have to realize China just built the world's largest high-speed rail network in 5 years. They just built 100 new international airports. They just laid highways all over the country. So we're not going to see the kind of growth in commodities that we've seen the last 10 years. Now, there's still areas to develop. The West, there's a lot of infrastructure that needs to be put in place. There's cities growing. There's still massive urbanization. You just mentioned the politics, the internet. There's 800,000 new internet subscribers in China every day. There's 450 million people on the internet. It's just growing rapidly. So there's expected to be, I think I saw the Kinsey report, expected to be over 1 billion people online within 3 years here. So I don't know how the government
and the country is what, 1.4 billion total?
Yep.
Okay, very good. So wrapping things up here as we summarize your views, you would say then that in terms of commodity plays in the Chinese market, you expect China then to have some nominal GDP growth. There will be certain sectors of the Chinese economy that's going to grow. And some of the benefits commodity-wise, would you agree then that some of the best commodities for our listeners to do more research on that China's still going to need, that there's going to be increasing demand for, would be the softs, the food, and then the energy, oil maybe, or uranium, like power, because China is going to need cheap energy to maintain, to fuel its growth and just to sustain itself, and then precious metals?
Absolutely, it's going to need all of that. It even wants to be a rare earth importer, so they have plans to do that. Oil will continue to import lots of oil, soft food stuff. The importation of food is just starting. China has tried very hard to become a self-sufficient on food. It's just not going to happen. Not with the increasing sophistication of the Chinese diet now. So they've just started to import U.S. corn. So that's going to grow, by huge leaps and bounds. So yeah, just basically all commodities for China will remain bullish, but we're not going to grow at breakneck speeds like we saw in the past.
Yeah, the commodities, we were talking about this before we started recording. The commodities I'm scared of are the base metals, the copper, the high-grade iron ore, the steel, and then coal, because those are tied, to building out the buildings, and they're too tied to industrial stuff. And China's already built a lot of the stuff. I mean, they are building an underground subway system in a lot of the cities, right? Yep. But there's a lot of the major infrastructure projects are already done, so I don't see as much demand for the base metals. But you have the rare earths going on. China has a monopoly on that. And then you have all of this stuff going on with Japan, which we should cover here before we finish the interview. You have this big Japan-China spat, which is growing over, an island. And the island, the only reason this island is of any significance, and it started, these same islands started with a fishing boat incident a couple of years ago that led to all the rare earth export quotas. And Japan, got shut off for a certain amount of time, they didn't get any rare earth supply, their Japanese companies, which threatened the Japanese companies' existence because they're technology companies, is that this island has oil, humongous amounts of oil and natural gas underneath it, right?
Yeah, absolutely. And it started over fishing. So fishing, obviously fishing is a huge part of the protein diet in Japan and China. Chinese fishermen have been encroaching in everybody's waters. South Korea shot a Chinese fisherman yesterday. I cover this on the China Money Report under Fish Wars. We've seen China having naval standoffs with everybody, but the long-term strategy, absolutely. Now each country is racing to put up as many oil and gas platforms around the islands that they can. This is the big news, the anti-Japan riots that happened here last week and last couple weeks. These were actually, if you can believe it or not, underreported in the mainstream media. So I had a factory near my house burned down, Japanese factory, had the Japanese street, which is like a street of Japanese restaurants and things, attacked, every glass window smashed. People here driving Japanese cars were pulled out of their car and beaten. There were estimated thousands of Japanese cars burned. This has happened before. People have to understand the absolute animosity China has for Japan due to World War II, so they don't forget these things. And these islands are a loss of face. China's not going to back down. Japan probably won't back down. This, from an investor standpoint, is huge because Japan just got kicked out of the world's largest car market, and they've invested billions and billions of dollars here. You have the GMs, the Fords; they can't keep up on orders right now. So this is really interesting. I covered a lot of that on in the China Money Report.
That's great, and that's great that you cover that. And Japan, you already mentioned this a second ago. The Japanese auto companies are indeed closing their shops, their sales.
Yep.
I think I saw that like Honda and Toyota, I think their sales are down 50% in
Yep.
just the last couple of months.
That's
Yeah, it's just amazing how much sentiment has shifted so quickly.
And that's just getting started. I mean, that was like the first month of the riots. They reported almost 50% reduction, Toyota, Nissan, and I believe they could have spun those numbers. I don't know anyone buying a Japanese car. I mean, you have to keep in mind, people are afraid to be seen in Japanese cars. Who's going to go buy one? You know, so these guys have invested tens of billions of dollars in China. You look at a company like Toyota, okay, 15% of their sales are in China. But a lot more of their earnings are in China, probably 30-40%, because they import a lot of parts here, and Chinese automotive companies in China make a lot of money. So, yeah, this is going to be a big, this is like last year the automakers in Japan had to deal with Fukushima. This year it's going to be the anti-Japan riots in China, and the only problem is this is not a problem that's going to go away anytime soon.
The Chinese are going to crack down further, Dan, on what's coming next, and you're starting to see this leaked out in the press too, is the Japanese companies are not going to get any rare earths out of China either. That's coming. So, I mean, they were getting a reduced amount of rare earths, but now they might not even get any. That's what I'm hearing.
No, absolutely. That could happen at any time. Rare earth is one area China has easy leverage. They can just cut Japan off and really nail their industry over there.
Yeah, China has the full monopoly on rare earths. For our listeners who are not familiar, China has almost 98%, I believe, of the world rare earth production, although when Molycorp comes back online, that'll reduce, and if Linus ever comes back online and some of the others, that'll reduce too. But China has pretty much the whole control of the rare earths production and also the supply chain. Even though they don't even have all the rare earth reserves, they have a small portion of the total world reserves in rare earths, but they just produce so much of it so cheaply, and then they built that into the value chain, and they control the whole value chain too.
Yeah, and that was a typical example of people like to say, oh, China has this master plan. Actually, it was mismanagement. China calls it over here selling gold for the price of potatoes. They refuse to sell rare earth for low prices anymore. You had several, state-owned Chinese companies fighting each other, knocking the price of rare earth down 90%. This is going back 10 years, before, 5 to 10 years before. But yeah, they totally pollute the environment, and then they sell this very valuable rare earth to these companies for nothing. And so China has clamped down on rare earth. They put VAT invoices on rare earth so they can control the exports. They're putting it on exchange because they want to jack the prices up, and they want to import. As soon as companies you mentioned, Molycorp, Linus, as soon as they're online, you watch the Chinese will be buying from them, and they'll want to keep their own rare earth in store.
Yeah, and China, this was their baby. The U.S. invented the rare earth technology, came out with the first rare earth product. One of the first rare earth products was the europium in the color TVs, the red, and that's what allowed a lot of the modern color TVs to be invented, and that was produced, at Mountain Pass exclusively, which was Molycorp's mine. And then the Chinese in the 90s basically just flooded the market with the cheaper earths, like you said, the competition, I guess, from the mom and pops and the large ones, and they just flooded the market. They didn't care about production costs or environmental standards, and now the Chinese are paying for that because their water's destroyed around the mines, their soil's destroyed, and they can't produce the rare earths at that price without the cost. So I think that's why the rare earths market, there's going to be some opportunities here for companies outside China. I know they've crashed, but we did have some big pops before the bubble burst in the rare earths, and I think the rare earths, there is a sound fundamental argument for rare earth demand, especially because of high-end electronics and all the other uses.
Yeah, I totally agree with you. Yeah.
Okay, well, in wrapping things up here, Dan, I think you've done a great job outlining all the things going on in China. China's got a lot of issues, going forward. They've got a lot of political issues, and, government corruption is obviously still rampant, but it's rampant here in the U.S. too, right?
Yeah. So,
please tell our listeners about the China Money Report and where else they can find your work.
Yeah, we can find my work at thechinamoneyreport.com. It's a monthly financial newsletter and also a blog. So blog's updated daily. We have a lot of interesting articles and things from China. A lot of very different take on China because I've been here so long. I speak Chinese. So there's a very different take I have on China as to most of the stuff you see passed around the mainstream media.
Thank you, and hopefully we can have you back on again soon for another China update.
Thanks, Jason. It's good to be here. Thanks again.